Hello, everybody. Welcome to the 21st edition of KoreTalkX, our LinkedIn Live Dash podcast that brings knowledge and helps everybody deal with the private capital markets. My name is Rafael Gonçalves. I'm the communications coordinator for KoreTalkX. And today we have a very special guest. As usual, all our guests are special. At least I hope they feel special. We're here with Douglas Ruark, if I can call you Doug. Please, Doug, tell us about you and what we're going to talk about today. The stage is yours.
Absolutely. Yeah, my name is Doug Ruark. I'm president of Regulation D Resources. We are a 24-year-old firm that specializes in SEC offering preparation, SEC filing preparation. We also have a technology component where we're able to build and deploy raise portals that run these raises. So we've been operating for a long time, and really the focus of our conversation today is going to be on the capabilities for real estate operators to raise capital under these various programs. Over half of our work actually is for real estate, whether that be real estate projects, real estate funds, syndications for asset purchases. So we're very familiar with the use of these programs to raise capital for real estate, and excited to chat about that today with you.
That's great. That's great to hear. And my weapon of choice today is iced tea. Well, aren't you drinking anything? It's not red wine. It's iced tea, I swear. I gotta drink something. This is something I picked up from my time in the radio. People wouldn't see us, so we would drink a lot during shows. But now we have cameras, we have streaming, so I have to tell people that this is not wine. I'm working. So let's start, Doug. So I would like to give an overview to our listeners and to our audience about the difference between you talked about Reg D, it's their specialty, of course. We have Reg A, Reg CF, Reg D, Reg S. I mean, we have some regulations, but from your perspective, what are the main differences you would highlight between Reg A, Reg CF, and Reg D?
Yeah, absolutely. Well, so Reg D, Reg CF, and Reg A plus, and really as far as the order goes, that's going from what I would consider most simplistic, but also least sophisticated up to most sophisticated. And so ultimately, when you're looking at these programs, a big piece of it comes down to what type of capabilities do you want out of the securities offering. Reg D offerings, if there's a benefit to Reg Ds, is the simplicity. I mean, Regulation D has been around since 1982. It's the old traditional private placement exemption. Certainly, there is the 506C option, which allows you to generally solicit to the public, but you do need to keep the investment limited to accredited investors. And they also have to provide verification. So there is some friction in that subscription process to a degree with that verification. But Reg D fits well in a lot of situations, certainly in a case where it's maybe pre-syndicated, where I have a client, maybe they have an infill site development project and they have, 5 or 6, 8 or 10 investors lined up. They've maybe got pre-existing relationships with them, but they basically just need a simple vehicle to execute sales of membership interests or limited partnership interests in a compliant manner. And I think in that case, Reg D works pretty well. Reg CF, with the changes made in March of 2021, where you can now do a direct CF, where you can run a raise on a custom-built raise portal, albeit that portal is going to be owned and administered by a FINRA broker-dealer. You're kind of now getting the capabilities of getting a bit of a mini Reg A plus as far as how that works. And then obviously the increase to $5 million on that cap really did open the door for a lot of real estate operators now being able to utilize that program. And so we're seeing a lot more real estate operators stepping in and doing CFs where they 5 million or less, but if it's equity, maybe that's all they need for the project, or maybe they need 10 million, but 5 million or 3 or 4 million gets them enough equity to leverage an A and D loan or what have you. The big benefit with CF is you could generally solicit the public and you can raise money from everybody. So you have the ability to raise money from the non-accredited portion of the public as well as the accredited. And that's a big advantage. I think the other advantage with CF in this case, there's a broker dealer on board, there's transfer agent, there's KoreTalkX running your back end with your subscription processing.
Always.
Absolutely. So you have a much more sophisticated offering, but you've also eliminated that friction in the subscription process. Anybody that's demoed KoreConnex's end-to-end subscription technology, it's 3 minutes. It'd take you longer to buy a T-shirt on Amazon's website than to go through that process. So, I mean, there's a big advantage there, in my opinion, on CF. And then Reg A, I mean, Reg A is the top tier program you could file under, certainly has investor acquisition capabilities equal to a public offering, is a very sophisticated offering. It's passing an SEC qualification process. You're allowed under tier 2 to raise up to $75 million in a 12-month period. There's selling shareholder features in there. There's the ability to syndicate a broker dealer syndicate if you want. I mean, so it's a very sophisticated program. We do a lot of work with Reg A for real estate operators each year. If there's a downside to Reg A, it's really just the prep cost and the timing. It does take longer and take more money to prepare one of these Reg A's because we're really drafting the equivalent of an S1 filing. And then obviously it's got to be submitted and go through a qualification process. But if the real estate operator has a little bit of more time, if maybe they're not pressed on, they don't have a property under contract they got to close on in 60 days, Reg A then is a great option. And especially for something like a real estate fund where you're going to go syndicate a larger amount of capital, it really is kind of becoming the default option for a lot of these operators to file under.
Yes, I like what you said about making Reg CF a mini Reg A, right? Mini Reg A plus, right? I like the way you see that, and that's something very interesting to mention as well, because Reg A plus has costs. People think that raising money is wow, making money appear from out of nowhere. No, you have costs, you have filings, you have lawyers, you have. I mean, there's a whole prep behind it before it actually.
Yeah,
Yeah,
absolutely. Yeah, and I think
yeah,
too, like that these direct CFs. I mean, there's not a big difference as far as the investor experience. I mean, granted, the Raise portal is going to launch with the broker dealer, but they're kind of in the background there. And ultimately, it really provides a very similar experience then for the investor. They're going to a custom built website meant to run your raise. There's a broker dealer on board. You get a 3-minute investment process. I mean, so it is interesting. I won't say it's an equal to Reg A, but it's pretty close. And ultimately, we are seeing a lot of real estate guys stepping in and doing these CFs now.
and we know that you're a specialist in Reg D, right? I believe that one thing you can talk about is the investor acquisition process. You mentioned about accredited investors and non-accredited investors when you talk about Reg CF. Although you're not exactly a specialist in investor acquisition, so what kind of investors are better targeted for Reg D and for real estate?
I think really what we're seeing now with the Reg Ds is that it would be a real estate sponsor or operator that has a network of high net worth or institutional class or family office money that they're looking to accommodate. I think if it's a real estate syndicator and they want to go out and raise money in the general public and they kind of need to build that syndication base, they're probably going CF or Reg A to obviously to be able to access the entire investing public. So I think on the IA side with a Reg D, most of what I'm seeing is it is going to be more established real estate operators where they have a network of accredited investors, and so ultimately they've already kind of built that base. And granted, maybe they do end up doing a CF or Reg A because they want to expand their base and start building in non-accrediteds. But I think on an IA side, I mean, again, it is the downside of the Reg D, if you're doing 506C at least, is that it is accredited investors only. And so ultimately, you've got to feel confident you're going to be able to raise money from the accredited crowd. So I think it presents maybe some challenges. I mean, I think if someone comes in and they don't have it pre-syndicated and they need to get into the public domain to raise money, that limitation, it could prevent them from raising capital. I mean, a lot of it just depends on what their network looks like. If they've got a deep network with sophisticated accredited investors, then they're probably going to be fine. If they need to go organically generate interest in the offering, then they might really want to look hard at CF or Reg A plus.
That's great. That's great to know. Because we're talking about a very different capital raising limits, right? We can go from 75 million, which is a huge difference. We can talk about is a huge number, We can talk about non-accredited investors. They probably won't have that much amount solely, but yeah, the different strategies for investor acquisition, they matter a lot when you talk about, especially real estate, right? Because real estate, it normally demands more capital, right, than a regular shop or a regular business where you can just sell some goods or everything. Uh, in your opinion, when since we're talking about Reg D, accredited investors only, do you believe that Reg D is more suitable for real estate companies? And what kind of company in real estate go for Reg D?
Yeah, I think ultimately where we would see Reg D applied in real estate, number one, if the client was syndicating capital for a single asset purchase and they already had maybe credit investors lined up, or they had maybe some family office money that was going to come in and fund that syndication, then Reg D is I think a great option. It's a simple option. It's going to give them a compliant offering to go raise money. They don't necessarily need the capabilities to raise money from the general public. And so in that case, that would work well. I think the other thing is timing. We do get people that call us that say, hey, we need to get an offering in place. And then, they've got a contract on a property and they've got a 90-day due diligence period. So they got to close in 90 days. And that means you got to get an offering prepped. You got to get it on market. You got to raise money. You got to clear any minimum offering amount in a pretty short period of time. So I think that's where Reg Ds then do have a bit of an advantage, is that they are more simplistic to prepare. So you're not dealing with some of these time frame issues. There's also not as many parties typically to coordinate. I mean, you're not going to have an intermediary BD on Reg Ds typically. You're a lot of times not going to have transfer agents. A lot of times you're not even going to necessarily have third-party escrow. So a lot of times then the lack of these other vendors involved creates some streamlining on the prep process as well. So that's where I think we might see Reg D used over some of these other programs, is either timing considerations. I got to get out as quickly as possible and raise money, or I've already kind of lined up the money and it is from either institutional class or accredited investors, and there's no need to go CF or Reg A and incur the additional costs.
So we see it's not only about the limit, the raise limit, or the amount of money. We see that it's clear that there's a whole other structure that is necessary for XCF or Reg A, and then maybe it's not needed for Reg D, right?
Yeah, I think ultimately where I see the CFs and the Reg A's coming into play is when a lot of times when the client's going to do something like a real estate fund where they don't have timing considerations, they don't have properties under contract, it's going to be blind pool. So we're going to raise the money first, then we're going to start acquiring assets based on whatever's been drafted into the filing as far as the gating on markets and the asset class and what have you. And so in that case, then the timing component is immaterial. If it does take 60 days to prepare the CF, for example, that's fine. It's not like they've got timing considerations that are impacting them. And then I think just from a size standpoint, if the client is going to start raising 10, 15, 20 million or more in equity, then, that's a significant lift, especially if they don't have institutional class investors lined up and they need to get into the public domain and raise money. They're going to look at Reg A. And I think ultimately, too, what they're looking at, and this is just what I've seen from a lot of these clients that we've worked with, is they are interested in building a syndication base for the future, for the sponsor. So as they execute these raises and they go out and do these Reg A's, and maybe they have 800 investors in their first Reg A, and then maybe they get 2,000 in another one or a different round. But ultimately, they start building this syndication base, and they might end up with 6, 7, 8,000 investors that are participating with them. And that's syndication power going forward, because then when they launch a new round or they have a new project, they got 8,000 people they can go to that have invested with them that are probably looking for more opportunities. And
That's
I'll say
huge.
this, it is huge, but I'll say part of what's been critical here, throwing a nod to KoreTalkX, is the back-end investor management technology. I have to unwind on many times calls with people where they say, hey, last time we did a syndication was 2008, and we want to do a minimum subscription amount of $250,000 because we just don't want to deal with managing a lot of investors. And I have to get them to understand, look, the game has changed. I mean, as far as technology for managing investors, the technology now to manage a large cap table is phenomenal. And so there's nothing to be afraid of in having a lot of passive investors that are supporting you. But beyond that, again, you're also building a syndication base, and that syndication power going forward for raising more money for more projects or another round out of the fund or what have you. So part of what happens then is I'll send prospects over to you guys and they demo your technology, and it's kind of funny because they come back and go, wow, like that really changed our outlook on how we want to go operate. And so I think that's the thing is, yeah, the rule changes have been significant, and the ability to go execute something like a Reg A plus is obviously significant, but the technology that's now backstopping these offerings, not just the subscription processing, which is phenomenal, but the investor management is huge. And I think it's changing how these real estate operators are really looking at how they're going forward with their syndications.
Yeah, that was powerful. That was a powerful thing to listen to when about the clients coming back from demo. Yeah, from our technology at CarConnect, of course, we work hard for that. Our technology team works hard for that. We are all growing. We are all working together, of course. But you mentioned two aspects actually that I would like to get back to. First one is the timing, right? Because maybe you are raising money and you don't have a project yet. You're still going to buy an asset. And real estate investments, they are obviously long. They're very different from regular retail goods.
Mm-hmm.
Obviously, real estate is in the long term as usual. And when you talked about the technology for managing investors and communicating with them, with your base, this is all about online capital formation, which is what we have been talking a lot about. We're even going to link our webinar on online capital formation because that's something CarConnect and you and RegD Resources and you stand for. The online capital formation is not a trend, right? It's something. It's like an evolution. We are maturing the Jobs Act and the regulations. So I'd like you to comment a little bit more on that, on the expectation for returning the real estate investment on, of course, long term, and how does how can technology help overcome this obstacle of wow, investing online, isn't it dangerous?
Yeah, I think, well, first of all, I think the real estate, I think, is very well suited to this because real estate is an asset class and an investment class that everybody can get their arms around. If there's an issue with deals like med tech, for example, is that you've got to very carefully and in an articulate manner tell that story because usually these med tech companies, they've got this amazing game changing technology, but you're talking about concepts that are going to fly over the head of the average investor a lot of times. Real estate's different. Hey, we're buying self storage facilities in these following areas because these following areas are growing and people need self storage. I mean, like, so I think when you look at online capital formation and you look at it as applied to real estate, they're a great fit because ultimately you really do want to access the entire investing public because the entire investing public has the ability to understand a real estate based investment pitch. And I think also what we're seeing is that more and more people are starting to understand that they don't have to be confined to publicly traded investments. That the mortgage broker up the street that makes 80 grand a year and he's got a $500,000 net worth, he can invest in a private real estate fund if he wants to, through a Reg A, through a Reg CF. So I think ultimately on some of the things that we look at with real estate being a long-term investment, obviously there's various ways that investors can obtain liquidity. One of the ways that we're starting to see obviously gain traction is ATS systems where once the offering is closed and there's not going to be any competition between primary sales and secondary sales, that you can open ATS access and then the investors, if they want, could put securities up on an ATS. Again, assuming there's no Rule 144 restrictions or anything like that. So yeah, I mean, I think from a technology standpoint too, you want to mimic what they would face buying publicly traded securities. So when I go to a raise portal and I hit the invest button, I want that experience to be professional, seamless, efficient, high tech, right? I mean, just as if I had gone to my E-Trade panel and I'm going to buy some shares in Google. And I think that's something that I think is really impressive about where we are as far as technology is you get that, I mean, again, you look at Core's end-to-end subscription processing system, you hit the invest button, it's E-Trade sophisticated as far as going through that process. And that's what you want. You want that investor to feel comfortable that they're going through a subscription process that's regulated, that's compliant, and ultimately that's where we are today with the technology.
Yeah, being compliant and trustworthy. I believe they are very important aspects, not only for internet, for online trading or investment, but for the internet as a whole, right? We have been seeing a lot of issues with digital assets, with some kind of issues going on, and FTX crash we just happened some time ago. I mean, we're not talking exactly about that, but yeah, trust and compliance are always going to be important from now on, and this is something that KoreTalkX also believes a lot. We stress this all the time that we have to be trustworthy and compliant. That's great to know. But as we prepared this show, you also mentioned that in your speech, we discussed a little bit about the tokenization aspect and the alternative trading system, the ATS. And you showed me an interesting point of view regarding these two and their relation with liquidity, especially in real estate. What are the benefits you see for each of them, for tokenization and for the ATS in this sector?
Well, look, I think ultimately, in my opinion, I mean, a lot of companies try and fit into the token box when there isn't a need to. And so I think there is some benefit, I think, wherein if you're able to set up tokens and there is a secondary market available for the tokens, or potentially even a utility benefit where you're getting tokens, it's backed by real estate, but there's some sort of ecosystem there where there's a utility benefit. Ultimately, I think, look, blockchain is phenomenal technology. I think with the token aspect, part of what an issuer needs to look at is what's the most efficient way to accomplish this goal, which might be syndicating capital for a real estate purchase. And then ultimately, am I going to increase my investor pool or decrease it by making that choice between tokens or traditional securities? And what I mean by that is an LLC, for example, that's going to raise money to acquire a real estate asset. Well, LLCs have been around forever. Investors are familiar with them. They understand a membership interest. They understand a waterfall of net cash income. So they're familiar with that. And that familiarity is going to allow them to feel more comfortable in investing. When you start looking at tokens, tokens are fairly new, even if they're real estate backed. Okay. And I think that is something you got to look at. There's a difference between a real estate backed token and a crypto coin that may not really have anything backstopping it. So, but what you've got to look at is has there been a proper and articulate and detailed, rights document, certificate of designation type document created for that token? I mean, usually when people come into our firm and they start talking about wanting to do a token offering for real estate, part of where I see them hung up is that they haven't really worked on any of the documents that are actually going to memorialize these tokens. What are the rights of the token holders? Because it does require some pretty specific documentation because it is a security. And I think ultimately then when you go into the public domain, part of what you got to think about is the investors that I'm targeting, are they going to understand a token better or something like a membership interest or a share of stock if it was going to be like a REIT? So ultimately, too, what I've heard over the years from the guys that are interested in the tokens is, well, hey, there's going to be secondary market liquidity because you get this token and the token can be put up on these platforms at some point if you want to sell it. Okay. Well, obviously, part of that's hinged on where are you going with the tokens as far as that secondary market platform and the access and what have you, and what does that market look like? But ultimately, with the advent of these ATS systems, an LLC, you can put membership interests up on an ATS and sell them and have secondary market liquidity. So I think I'm not anti-token. But I think what I've seen a lot of times is, and I think I'm starting to see it kind of tamp down a little bit now. But 3, 4 years ago, with the craze on crypto and tokens, everything, I think people were just trying to force a deal into that token box, wherein I think they probably would have been better off sticking with traditional securities. Um, so ultimately, I think there are times where it's a fit, and I think there are times where they might just be better off selling traditional securities. And like I said, a lot of it comes down to who are they targeting, and are those people going to
Yes.
understand a token versus traditional security?
Yeah, I mean, what we're trying to say here is that, especially regarding liquidity in real estate, uh, tokenization is not a silver bullet, right? It's not necessarily something that will magically bring solutions, right?
I would say it's not a silver bullet, it's an option. And I think it's an option that might fit well with certain deals. And I think ultimately might not fit that well on other deals. So I think it really just comes down to the client's specific situation as to whether or not they're going to look at that type of hybrid security.
Nice. Yes, it's very, very interesting. As we are approaching the end of our show, uh, something else we like to cover. We're having the Core Summit coming up, which is an online event, educational event, 100% free for participants. It's starting on February 27th, next Monday, not this Monday, next Monday, 27th until March 3rd. You are going to be in a couple of panels, right? I believe we're going to be in two panels, right? Panels, right, Doug?
Yep, correct. I'm going to be
Uh,
moderating two panels. Looking forward to it. So it's going to be great
Great.
people on both. So yeah, it's going to be fun.
Yeah, what are your panels? Sorry, I'm trying to get back here to my schedule, but it's not opening.
Yeah, I've got
Uh,
let's see. I've got the why real estate panel. Uh
yes,
and then on March I've got which regulation should I use for real estate to reach everyone. So those are the two that I'm going to be.
perfect.
Yeah, those. It looks like those are the two that I'm monitoring.
Yeah, exactly. So we're going to have a very expanded, in-depth version of this talk
Mhm.
over the Core Summit. You can subscribe on Airmeet. We have links on our page for the LinkedIn for Airmeet. It will be fun. Definitely will be fun. We'll bring a lot of opportunities, and of course, deepening this conversation we just had, talking about regulations, options. We have people with different backgrounds, broker dealers, transfer agents. I mean, it's going to be wonderful. Doug, I believe we can wrap it up. Almost half an hour. Wow, time flew. Leave your final goodbyes. Invite people for you to follow you, your page, your Instagram, your LinkedIn, whatever. Just
Yeah,
stage
absolutely.
is
Well,
yours.
you can find us online, regdresources.com, or just type regulation D resources into Google. We'll come up. Obviously, our LinkedIn, Facebook, all that stuff's linked on our corporate site. And certainly, anybody that has any questions on these programs, or hey, here's our situation, and they're maybe looking for just for some feedback, by all means, give us a call. We do a ton of real estate work. It's really exciting times in the industry. I mean, as someone that's been doing this for 24 years now, I remember the old school days where you had one option. And you had the old Reg D program, and that was it. You couldn't generally solicit anybody. There was certainly wasn't this kind of technology available. So I think it's funny when you see people like myself or Oscar, people that have been around this business for a while, and you see the glow. I think it really what it is just that it's a completely different time frame now, and the capabilities for a company to go raise money and the technology that's there to assist them to be successful, it's just phenomenal. So it's a fun time. It's been fun to watch this industry change and evolve, and it's evolved in the right direction, in my opinion. So yeah, so it's fun doing these. I like sharing my excitement about the industry, and obviously love being partnered up with KoreTalkX and as a technology partner on these deals.
Yeah, and it's amazing. You said 24 years. So you started before the Millennium Bug, which never happened, by the way, but it's still a
99.
landmark.
Yeah. Yeah, no, we started in 1999. So, like I said, I mean, watching these programs evolve has been one thing. Watching the technology evolve is another, and then just the fact that you can go out on your social media and really leverage a lot of attention for an offering very quickly is powerful stuff.
Yeah, it's powerful. Well, the first change was the Millennium Bug, which never happened, but still, it's amazing to show how long you've been working in that, and it's great to be partnering with you. And it's gonna be great having you on the Core Talks again. So, Core Talks and the Core Summit next week, of course. So,
Yep.
thank you everybody for listening to us, for watching us. You can follow us on LinkedIn, on YouTube, on Spotify. We are there. We are happy to share information, to share knowledge. We are open for a conversation. Give us a call. We have the largest Reggae and Reg CF library online in our blog. Visit www.carconx.com and you can find us there. So it was a pleasure being with you. Thank you, Doug. Bye bye.
Thank you.